It's a small, but in other ways significant 1% tax on stock buybacks. And does it remain small? Jared Dillian, editor of the Daily Dirt Nap, of course, wrote about it in his most recent column in Bloomberg Opinion. And I think for me, what stands out is rarely in Washington, once you have a tax, you never cut it down. You usually start increasing it. What do you see as sort of the big long-term implications of a buyback tax?
Well, there's a lot of implications. I mean, the tax will go up over time. It'll go up over a period of years, but it doesn't really influence decision making at the CFO level. A 1% tax is pretty small. Just to put this in perspective, we did $850 billion of buybacks in 2021. A 1% tax on that is $8.5 billion. That's enough to fund the government for about 6 hours, so it doesn't raise a lot of revenue. But what this is it's the opening salvo on what is going to be higher buyback taxes in the future.
Higher? How much higher can you go, and what type of ultimate impact is the government going to want to have in terms of revenue raised or other real penalties, if you will?
Well, what I think they're trying to do is to nudge CFOs into paying dividends instead of doing buybacks. So that's pretty significant. I think the buyback tax would have to go up to about 5 or 10% before it would start to influence CEO behavior. By the way, the dividend yield of the S&P 500 in 1990 was 4%. The dividend yield of the S&P 500 today is 1.5%. And I do think the government would like to push people into doing more dividends.
I think it's interesting. I love some of the focus that you have, in terms of the nuances between buybacks and dividends. And you talk about Rubio's proposed buyback tax. And you said then that instead of taxing buybacks, the better thing to do is to eliminate taxes on dividends. Talk to us about why there should be an equal footing there and what really incentivizes companies to be doing.
Well, just for background, when you're paid a dividend by a company, that money is taxed twice. It's taxed first as corporate income, and then you pay a tax again when you receive it as a dividend. So buybacks are more tax efficient because that income is only taxed once, and CFOs have figured this out over the years, which is why they're doing more and more buybacks. So when Rubio proposed the tax, I said, why don't we just eliminate taxes on dividends? That income is already taxed twice, but the problem is that we're not really in a political climate where anybody's in the mood to cut taxes on anything.
Yeah, Jared, you're smarter than that. Once you have a tax in Washington, you don't cut it, you just raise it, right, to match some of the spending levels. You mentioned in your first answer that it doesn't change a CFO's perspective. Long term, though, what would it take to start to think about use of cash, cost of capital, a weighted average of how you're thinking about how that capital is most efficiently allocated?
Yeah, I mean, I have a pretty negative view of buybacks. I mean, not for corporate finance reasons, but more for behavioral reasons, because companies tend to be pretty inefficient stewards of their own capital. When they buy back stock, they typically do it at the highs, and then they run into trouble and they issue stock at the lows. So they're buying high and selling low. And when companies do buybacks, they're typically destroying value. If they give that cash to shareholders in the form of dividends, the shareholders are better stewards of that capital, and they can use it however they want.
Yeah, I mean, does this mark a grand return of the dividend discounting model? Are the quants going to come back in full force, given what you're saying, that this actually might not change behavior that much?
What I do think it will do is it'll eat into the returns of stocks that do buybacks. There is an S&P 500 buyback index. There's actually, I think, at least one buyback ETF. And what you'll start to see is the outperformance of the buyback stocks sort of disintegrate over time as this cash is paid out in tax.